I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
A record first quarter is in the books, and today starts a fresh quarter. What type of action and clues can traders measure to adjust their positions as the year continues? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Rudd, the Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So happy April, everybody. It is a new month, it's a new quarter, and we have a new all-time closing high in the S&P and the Dow, but still missing that excitement, that exuberance, Scott.
I just feel like there's just not enough people involved. I feel like the first time we got here, the entire world was in the market. Everyone was paying attention to it. Everyone was high-fiving. There were stocks making new highs all over the place. And we have that actually, today. Different types of stocks, not as powerful, but there's still a lot of appreciation or equity appreciation. But so many people out there, unfortunately, have been stopped out by the market. Whether NASDAQ 5,000 when the bubble burst, or unfortunately when 9/11 hit, and even with the financial crisis. So no one really got back involved, or if they did, they're involved and they're probably happy, but no one is fully enamored with the stock market the way they used to be. So typically until everyone's back involved, we don't see a market high, so we probably can continue higher short-term, long-term. But I do think that people are starting to pay attention. Hopefully they're educating themselves, because if you've been involved and you've taken an educated approach with a plan and a process, you've been able to hold on to stocks that are making new all-time highs, and even stocks that have rebounded. There's been something for everyone, but you have to want to look into the market to actually see it.
Right, but it seems like the whole ride up, the question has been how long can it last? How long can it last? So after the gains that we've seen, can this continue into the second quarter?
Well, first quarter, what do we have? We had like 10+% in a lot of the major indices, so I'm not expecting second quarter to have that. So I'm in a bit of neutral. I'm still long. I'm trying to figure out what type of composure we're going to have in the second quarter. Where will money flow? What will the speed be? What type of action? We could digest this quarter, maybe extend it first because you get new money that comes in, and then go sideways and correct a little bit. But then I do think that this type of action is going to warrant higher prices this year. I don't think last week's high is going to be the high of the year, and I also don't think that if we put in a short-term peak in the second quarter, like everyone's saying, oh, we'll put in a short-term peak and then we're going to get crushed 10, 15, 20%. I don't think that's the case, but we could measure it along the way. I do think that there's a bid to equities, and incrementally our data here is getting better, and let's see those trends continue.
All right, well, so for now, what are the levels that you're watching in the S&P?
Well, if you go take a look at the chart, you'll see a trend. We stay with the trend until it ends. The trend is your friend, right? That came from somewhere, and here was the low in November. And from there, we've had this nice gradual trend all the way up, which has been going on for almost 5-6 months. Then we've had some accelerated trends. Okay, this one right here that corrected a bit to the downside, and then we held this more intermediate trend. Then we went again. This is when all the Cyprus news hit, and we held the 21-day. And here's when we extended last week above highs, above this pivot here, which was what, 1564. We closed, near Friday, Thursday's highs. I'm sorry. So now I would say if we could stay above, maybe 1558 to 1560 for next few sessions, we should extend through 1570, and then you got to take a look at the historic high here on the monthly chart. The historic high here was, what is this, 1576? That's your last point of reference. Once you go above 1576, you run out of points of reference. So if you were short and you haven't covered already, if we blast through this area, you can have something to think about. But these guys have had something to think about the entire time. And I know someday they'll make some money on a pullback, but they've missed a hell of a lot of nice action to the upside, where is if they trim and trail and book profits, it's not like the bears could take it away from you or the market. You just can't chase excitement all in when finally people start realizing that markets can go higher.
Right, and it's important to note that we're not seeing the financials or the home builders leading this rally, sectors that you might expect to be. We're actually seeing more defensive stocks leading the market. So what does that mean to you, Scott?
Well, to me as a trader, it's not exactly what I want to happen, but you can't have everything you want in life. Same way people have said, where's the volume, where's the participation, blah blah blah, But money's being put to work, and I would say some of the sectors, maybe it's coming more into sectors that aren't high growth, that also have dividends, because you can't get any money in the bank. So if you look at the XLU, which is the utilities, there's money being made there. It also has been trending, and then look at this powerful breakout above this prior pivot. So technically, if you follow this, you could be making money also, just that a lot of traders don't look in this way, but there are a lot of mutual funds, I'm sure, only, and buy only vanillas that are doing very well here. Like you mentioned before, you have the XLF. Okay, this was a much cleaner move from the breakout of this year until it peaked, and this is when traders feel a bit more comfortable. You have markets being led by Goldman Sachs, by Bank of America, by JP Morgan, right before it trended, kind of broke here to the downside, then it did it again. And if you look real closely here, it's nothing to be too alarmed by. Yes, it's not the first one up and out of the block, so I would say watch this level for the first week or so. If we could stay above 1803, above the 21-day, I think we'll continue this base, and then at some point it'll get going again. But if we break below 1803, we could see some more downside to the 50-day, which is at 1780. And we've already seen a stock like Goldman Sachs that broke its accelerated trend line get below the 50-day, but it's still holding in there. Look at the move that this has had. So it's, you can look at it with glass half full or glass half empty right now. Something to watch. 144-ish. If it breaks below 144, that means there could be problems there. But if it reclaims a 50-day, this descending little channel here now could get resolved to the upside. So I think it's correcting, and it's not the exact type of movement that we want. But you just have to make adjustments and just do a little less, but don't fight it.
Well, let's check in on some of the other sectors right now. The industrials are another sector that's taking a break right now. The XLI is trading around the 8 and 21-day moving average, though. So how constructive could this look for higher prices?
It seems to be similar, like a similar pattern to the banks, where it just hasn't gone yet. It pulled back to the 21-day. Money's going elsewhere, but it's hanging in there. So as long as it hangs in there, it's fine. Everyone's looking for the negatives. Oh my goodness, the industrials, which surprisingly were not always a sector that traders look to, because again, it's not where the power has been, but for the past year, the industrials have been in play. You look here at the XLI, very similar pattern. This was the gap up to start the year. Followed the 8-day finally, broke during the Italian elections, made new highs. So what did it do? It held the 21-day, held above the 50-day. It did close on the highs on Friday, just not above the 2013 highs. So here's your level to trade against. Let's see if money comes in here, to be, just money comes in back to work in the beginning of a quarter. Let's see if it comes here. If it doesn't, makes a lower high and starts to go, to the downside, then you'll know that you just have to sit tight and wait.
Right. And just like I'm sure you'd like to see the financials leading the market rally, you'd like to see the home builders, which are resting after the recovery rally that the XHB did have, but it is holding higher levels of support. So it looks relatively constructive, right?
Yes, and I think we're just all spoiled.
Right.
Home builders, we're used to seeing them go first, and the banks, and we used to love tech. Technology would go first, and a rally was not happening unless technology, ruled the roost, and we got used to it being, okay, well, the financials and the home builders are doing really well, leading the way, but for now they haven't. So get over it, get used to it, and see where the money's going. And if you look here, you will see that in the home builders, it's still above the 8-day moving average, above the 21, above the 50. It's just not breaking out right now. So you could call that a negative divergence, but I don't think it really means much until you see it start to break lower and you see some type of compelling top pattern in the S&P, which we have not seen yet. So right now it's just taking its sweet, what time.
Well, you mentioned tech, and that has been a mixed bag, but the Cubes has been trading in a range and broke above intermediate resistance on Thursdays. So could we see some upside follow through?
Yeah, it's interesting that it held in there when you saw Google come off on Friday, Apple came off on Friday, but there is some mega cap tech that's getting some attention, which is also highly weighted in the Qs. So if you look here, you will see, for the Qs though, and technology, it's really been stock specific. Unfortunately, if you tried to get a technology exposure and you were going after the Qs, we're not even above the September highs of last year, where you've seen base on base moves above previous sectors September highs. But right now, maybe it gets a little bit more attention. If this starts to break above 69-ish, it could play some catch up while the other sectors rest and get back here, so you can create some alpha if money comes into technology. So I think this area is one to watch, but I do think if you're looking for alpha, you have to look for individual names within technology, not park your money in the Qs. But Qs right now seem poised to make a move towards those September highs.
All right, coming up, we're going to go in the trenches with financial stocks, which are pulling into some key support levels. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with financial stocks, many of which are pulling into some key support levels right now. We just touched on some levels to watch in Goldman, so let's jump right on in and talk about Morgan Stanley, which has been holding above its earnings gap, but the range is getting pretty tight. So could we expect a break to the upside or the downside anytime soon?
Morgan was the last stock to play catch up to the upside, and then now it's the first one to test the gap that started the year. So to me, I've tried to play Morgan Stanley, as I thought the market would broaden out and the rally would broaden out, and every time I've done that, I've been a bit burned. So if you look here at the chart of Morgan Stanley, you will see that, after breaking this ascending channel here to the downside, it tried to go again, and I remember being long on this day, and kind of got sandbagged where it opened lower, and I just got out of it. And here we are hovering right near the gap that started 2013. Now I want to just show you something relative weakness wise. Look at the XLF. Okay, this is where it started in 2013. Look where we are now, well above it. You go to Morgan Stanley right now, this is the gap, from 2013-ish, okay, and we're right back to it. So that to me shows me relative weakness. If the banks were going to start coming off, this one could be the first one to be shorted if you're a hater of the banks. 2178, we break and close below that. You could see a move lower, which could take us to fill the gap and then maybe lower. So I think this is a very important spot to watch on Morgan Stanley.
Now what about Wells Fargo, which is pulling into its 21-day moving average, but this is a level where it found support last week. So if it holds, could higher prices be in store?
Well, Wells Fargo has been a different animal. This one has been a quality investment over the years, and it has been a great trading vehicle. Recently, it made new highs, and it has had a pullback. So if you were looking to get in Wells Fargo for what could be higher prices later this year, which I still think there are higher prices on its agenda, look here, and you'll see that this is a spot to look at. Okay, here is a move to highs, and then from there, it kind of got, engulfed and just been trickling lower. If you look at the last price point where you could have been a buyer around 36, I would say right around here is interesting. Okay, it's still above the 50-day, so it's showing you relative strength where, Goldman, Morgan well below it. And, right here is a spot to maybe nibble against, especially if you sold into this excitement. So, this is a level to watch, but lo and behold, if the financials do get weaker, at some point it might be able to test this, so don't go all in right here. But if you're trying to get involved and you're itching to do it in Wells Fargo and you didn't do it here, 21-day is a decent spot to try.
Bank of America just fell below its 21-day. The stock has been weakening. So what levels would you say it needs to hold?
It's funny how everyone's saying like it's weakening. Red Dog, you worried about Bank of America? I'm like, guys, went from 8 to 10, and then from 10 to 12 and change, and it's been trading. And yes, it's been weakening a little bit, and it can't go up every single week, but it's still, it's still well above important levels we've been watching. I've been staying with a small amount, as it did break back below an area that it should have maintained to have upward momentum. If you look here, which I always talk about somewhat breakout failures, well, here short term, it broke out above this recent pivot. Okay, I remember selling some strength, and then this was a spot you could have used as a short-term stop, and now we're back into the base. And if you look here, these bases can go for a long period of time. Remember this base down here? It took a long time before it finally held higher and gave us a nice core trade above this 1095 before having this trend that wound up getting broken here. But again, if you would have gotten out on this move when it broke this trend line, which was right around what 1190-ish, okay, and then said, oh, I feel really good, look what happened here, we went all the way to 11, didn't get back involved, you were scratching your head when it was back up here, peaking around 1293. So all in all, it's at the 21-day. it's been tracking it and following it. If your processes, if something breaks the 21-day, get out, fine, get out. But if it does reverse somewhere in the middle here around the 50-day, make sure you get back involved, because I would say, everyone likes when I put my probability out there. I will put my 80% probability that this 1294 is not the highs of 2013.
All right, you said it, but there's always exceptions. And
Yes.
what are you thinking of BlackRock right now? Because it's trading above all key moving averages and has been above its 50-day since October.
Well, this one's been best in breed. And this one actually, again, is not on every trader's radar, but for funds that have been accumulating BlackRock, this one has been best in breed, creating alpha. And you look here at BlackRock, you will see it's still above the 8-day. So with that said, if it were to break above this area, it'll be doing it by itself. So it might be hard for it to sustain. This was the last time it went, and you had a few nice trades here. And if you wanted to just say, if you think the bank's going to pull in and you want to have a high level stop, this would be your high level stop right around this 252. So, let's watch BlackRock, because if the banks do make another leg lower, this perhaps could correct a bit. But if the longer we go sideways, and if we're looking for leadership, this stock is in a position to create leadership above this recent area. And the highs here is 259.57-ish. So that would be a level, for action, so to speak.
All right, time for some quick hits here. Let's talk Apple, which had been a nice trade, not showing commitment now at 3 down days at the end of last week. So what are the key levels you're going to watch in Apple?
To make it real quick, okay, we were buyer at 440. We added through 458-ish, the 50-day. It went as high as almost 469. Sold some into strength, held some, went back below the 50-day, and pretty much been out of it for the last two days or so. Call spreads worked out pretty well. Both were around the double, depending on how you held it. You look here now, and this is the last line of defense on Apple. Okay, here is this trend line where this was your nice trade. This is when it peaked. It should never have given back the 50-day if we were going to hold higher and continue. It gave it back pretty easily. So now today, most of my guys, including me, will be watching this 441.62. If it were to break below it, come back above it, maybe I'll get involved for a short-term trade, but I'm not as enamored with this level the way I was right here when it was power packed, against its descending trend line, when shorts had to cover, and long as we're looking for a trade. Now maybe you get some kind of bounce here, but I would watch it even closer. I'm back to a level versus a level on Apple.
All right, and over in Facebook, and not much follow through on Thursday from the stocks rally on Wednesday. So how constructive would you say it still looks?
I would say you finally woke up on Wednesday and it gave back more than it should have on Thursday. If it could stay above 25.50, I do think some traders will put it back on the radar. If it breaks below 25.50, I think it still needs more time.
And Las Vegas Sands had a nice move on Tuesday. Can the upside continue there?
This one has been like a slow crawler, okay? It's just been going higher. We had it, I think, a month ago in off the charts when it was nice and tight. You look here at Las Vegas Sands. It hasn't been clean like it used to be years back, but it's been trickling higher. So at this given point, if it wants to continue, it's going to have to get above this 56.83. If you look, look back at more of the macro chart here, you will see that that peak that happened, in April a long time back was on 412.12. That peak right here is 62.09. So if it wants to get back to there, it has room. It went above this peak, so now just continue to trim and trail. It's been pretty decent.
And now over in gold, the GLD did remain weak last week, but do you think we may start seeing more attention paid to it?
At this point, it still has a lot to prove. Ever since it's peaked, it's been in a downtrend. Last inflection point was at that intermediate pennant when it broke around 161. You look at the chart here, you'll see that right around this 161 was when it was nice and tight. It could have broken to the upside or to the downside. It went to the downside. Ever since then, it came into macro support going sideways here. You did get a little bit of a bounce off of it, okay, right here. Okay, but then it got contained by this resistance. So I'd say short term, it has to stay above 154-ish to have any interest. And then for it to really change, it's going to have to break above this 150, 650 to maybe take back the 50-day 157, but with authority. Like, it's got to close on its highs. It's got to have huge volume. Otherwise, it's still just in la-la land, and it's not really an A setup, more like a B-. All
right, so in summation, what will we really be focusing on today?
I just want to see where the flows go. I want to see a lot of people had vested interest into the end of the first quarter. There are some individuals, yes, there were people involved in the market that probably performed very well in the first quarter that might have did some dressing. So you want to see if there's some undressing. And you want to see every quarter is different. You want to see where what's a flund?
I don't know. I haven't heard of that one.
Yeah, where funds flow. And you want to watch where they go, and you want to go there with them, okay? And we've seen, some banks, some home builders, some technology kind of on the side where the action hasn't been there the past month. Let's see if some action comes back. Or if it doesn't, we'll see if they roll over and if they hit lower prices. But for now, I think since November, I've had on average just say 7 to 8 longs. I peaked at 15 longs, and now I come in today with 5-ish. So I'm in pretty much neutral, and I'm not going to fight the move, but I'm going to try and stay with it. But I'm not overly enamored, and I'm not jumping out of my skin trying to say I have to get into this now. I'm going to let the quarter come to me. And if you did poorly last quarter, don't revenge this quarter. Let it come to you. Okay, because there's a lot of year left, and if you didn't perform, just look at why, and look within yourself and take accountability why you may not have performed. And if you did some things well, work on them. And if you did some things poorly, also work on them. We all have a lot, including me, a lot to do this quarter, a lot to change, a lot to evolve with, and we all learn every single day.
All right, and with that said, happy trading, everyone. Have a great day.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.